Hello and welcome to episode 10 of Talking Central Banks podcast with me, Karan Medici. This platform is exclusively dedicated to everything central banking, monetary economics, and policy technicals for observers across the world. Today, we will be talking about the current monetary policy challenges faced by the Banco de Mexico amidst tariff wars and other macroeconomic headwinds faced by Mexico, which is, of course, very closely aligned with the American economy. Our guest tonight is the former Deputy Governor of the Banco de Mexico, Javier Guzman Calafell. Javier holds degrees in economics from UNAM, the University of Leuven, and Yale. He served as the Deputy Governor at the Banco de Mexico between 2013 and 2020. Before he was the Deputy Governor, Javier was the Director General of the Center for Latin American Monetary Studies, or CEMLA, and also served as an alternate executive director and executive director at the International Monetary Fund, representing Costa Rica, El Salvador, Guatemala, Honduras, Mexico, Nicaragua, Spain, and Venezuela. Javier was a professor of economics at the ITESM Mexico City campus and is the author of many articles in the field of economics. He has also been an author coordinator of 8 books. He presently works as a consultant and writes for El Universal, one of the main journals in Mexico. It's an absolute honor to have you on the show, Javier.
Thank you very much, Karen, and thanks a lot for the invitation. I am very glad to have the chance to discuss with you issues related to central banking in Mexico, in particular monetary policy. Thanks very much.
My pleasure, Javier. Starting with the fiscal side of things, the passing of the 2006 Law of Fiscal Responsibility, or LFR, mandated a 0% fiscal deficit after Mexico became one of the most important free trading nations in the world. The economy did well too, and the role of government spending was fairly reduced. Nevertheless, Javier, thanks to Pemex, Mexico is now all set to record a fiscal deficit of over $31 billion, the highest in over 80 years, if I'm not mistaken. What went wrong, in your opinion? Also, does this impact the government's fiscal muscle for sustaining growth in the near term?
Yeah, well, let me start by saying that public finances are one of the main challenges that the Mexican government, the Mexican economy is facing nowadays. And this is the result of a combination of reasons. To start with, public revenues are very low in Mexico. I don't know if you are aware that tax revenues in Mexico are less than 15% of GDP. But at the same time, the Mexican economy has huge spending needs. When you take a look at the amounts of government spending in Mexico compared to the OECD standards, the OECD average, for instance, in the case of education, health, security, infrastructure, etc., you will see that the figures for Mexico are one of the lowest, and in several cases, the lowest in the OECD. In addition to that, there are a number of rigidities that public spending is facing in Mexico. And these rigidities are related to several components, I would say. First of all, social spending. Social spending is very high in Mexico, and it increased a lot during the previous administration because it was a central component of the political strategy of the previous administration. But in addition to that, we have huge amounts of spending, and they are growing, of course, as the population ages in pension. They are more or less now standing at around 4.5% of GDP. Also, interest payments have increased. They are now a bit below 4% of GDP. And then, in addition to all these problems, we have the one that you were mentioning before, which is payments. And there has some progress been made recently in alleviating the liquidity problems of Pemex. but
Right.
the structural problems of the enterprise have not been solved yet. So this is the context in which public finances have evolved in recent years. And then you have what happened during the previous administration. We had these problems, these rigidities. They are not new, although they were accentuated during the previous administration. And an additional problem that we saw was a very inefficient allocation of public spending. But despite all that, what we saw was a prudent management of overall public finances. That is to say, they were very careful about the size of public debt and about the size of the public deficit during most of the administration. But then we got to the end year, and they needed to conclude a number of projects they considered very important for them. And at the same time, they needed to have a successful electoral process, which was going to take place in the following year, in 2025. So as a result of, or at the end of 2024. So as a result of that, what we had was a large increase in the public deficit. The public deficit during the previous administration, that is to say, at the end of 2024, reached almost 6% of GDP. And in addition to that, we had a very large increase in public debt. Public debt increased about 8 percentage points, 8 to 9 percentage points from the beginning of the previous administration in 2018 to its end in 2024. The problem now is that that fiscal deficit is unsustainable, and there is basically no margin or very little margin to increase public debt. So what we need to see now is a correction of that situation. The problem is that additional social commitments have been made for the reasons I was mentioning before. This has proved to be a very successful political strategy. But the problem is that you need to have the financing to meet these commitments, and they are not there. So we are in a very difficult situation in the short term, but especially in the medium term. In a situation in which debt cannot increase, the solution can come only from increases in revenues or a decline in spending. And the problem is that the current administration has announced that they will not introduce a major fiscal reform, which of course would yield, significant public revenues. Right. And the problem is that a fiscal reform would be very costly from a political perspective, and they argued that there is room to increase revenues through other sources. But the way for instance, tax evasion, which is a very serious problem in Mexico. Well, the situation is that it is not clear to what extent those revenue measures are going to be successful. So what you can expect is that the largest part of the effort to contain the fiscal deficit and to avoid an increase in the public sector debt will be through a containment in spending, in public spending. In fact, in the budget that the current administration presented to Congress, it is under congressional consideration nowadays, they included some medium-term projections. And one of the assumptions of those projections is that public debt, in fact, it is a constraint of those projections, is that public debt is not going to increase its share in GDP. And what is the implication of that? Well, they use a number of assumptions, which in my view are optimistic. But despite these optimistic assumptions, one of the issues that is clear from those projections is that public investment in Mexico is not going to increase in coming years. In fact, it is going to show a marginal decline as a percentage of GDP. vis-a-vis the figures that are projected for the end of this year. So the problem is, in the absence of public investment by the government and in a context in which the economy has huge needs in a number of sectors, yes, you are right, the fiscal muscle to support economic growth is going to be very, very weak.
Dialing back to the reform period, Javier, post the 1980s reforms, the role of public expenditure declined, but at the same time, though controversial to say this, but private investment was unable to build sufficient gross fixed capital formation for the economy sustainably. Therefore, I often wonder, Javier, that is it actually safe to assume that the current inflation problem in Mexico is being caused because of a supply constraint problem?
Well, it is, I would say, Karan, that it is a bit more complicated than that. I mean, you are totally right. Part of the problem is coming from the supply side.
Hmm.
But the situation overall is a bit more complicated. What I would say is uh, the supply factors. As a result of the problem of public investment and also of the fact that private investment has not grown rapidly in Mexico. In fact, it has become at relatively low levels. What you have had is, coming from investment, little stimulus to growth. But there is an additional problem, which is very important in the case of Mexico, which is
Hmm.
productivity.
Hmm.
Total factor productivity in Mexico, when you take a look at the long-term evolution, you take a look at the figures from the early 90s to the most recent figure of statistics available, and you will see that the average annual rate of growth of total factor productivity has been negative, in fact.
Mhm.
So when you have a combination of an economy in which investment is modest, both public and private, and in which total factor productivity, in fact, has been declining over the years, the result of that is a significant reduction of the potential rate of growth. I mean, it is always difficult to have a precise estimate of the potential rate of growth, but I would say that on average, private sector estimates are around 1.8% per year, which is very modest. And in fact, I would not be surprised if the potential rate of growth were lower than that. You have, I would say, an additional problem coming from the supply side. And that is the fact that the degree of competition in Mexico is very modest. We have an economy which is dominated to a significant extent by monopolies or oligopolies, both in the private and in the public sector. And of course, that results in a number of efficiencies, which evidently also constrain the rate of growth of the economy. So yeah, you're totally right. That's one important factor, but that is not the only one. We have a number of additional elements, and some of those elements have been especially present since the previous administration, and it is likely that they will continue during this administration. One of them is the evolution of real wages. Real wages in Mexico have increased very rapidly. We have had a very, very sharp increase, particularly in the minimum wage. Let me tell you that there was margin to increase minimum wages. They had lacked significantly the evolution of other wages in the economy, and in fact, not many people. The percentage of a population which was earning the minimum wage was relatively small. But the thing is that you get up to a point when you cannot continue to increase minimum wages at the same pace, because that is going to have an impact on the one hand on inflation and on the other hand on employment, particularly in a context in which you are not taking into consideration the evolution of labor productivity to adjust wages. So that's another element that I think is beginning to have an impact on inflation. And I have the impression that still for next year, we may have a significant increase in the minimum wage. So that's another problem that is having an influence on the evolution of inflation. In addition to that, we have an economy which is very open. Mexico is a small economy, and it is, very open to both foreign trade and to capital movements. And that implies two things. Whenever there is a shock, an external shock on the economy, the impact on domestic inflation, the direct impact on domestic inflation may be large. For instance, when you have a shock coming from increasing commodity prices, well, obviously, with an economy that is very open, normally the impact on prices is larger. And there is an additional channel, which is the exchange rate. You know that we have a flexible exchange rate mechanism, which was, by the way, is a blessing for Mexico. And whenever you have an external shock coming from any possible source, well, you have an exchange rate which tends to be very sensitive. The pass-through from the exchange rate to prices has diminished considerably over the years. But the thing is that despite that diminution, the movements of the exchange rate can be large. So the impact on inflation can still be significant. And you have, I would say, another element that is important to take into consideration, which is inertia. We have a lot of inertia in the economy. One, I would say, direct reason for this inertia is that the central bank over the years, I would not say that it is a result of this administration, it has been a long-term trend in Mexico. The central bank has not been able to meet the inflation target. We have an inflation target in Mexico of 3%.
Right.
And when I say that we have not met the target, what I mean to say is that we have not been able to achieve an inflation rate which fluctuates around the 3% figure. But the reasons, of course, for that failure are varied. And one element that I think is important behind that trend, behind that failure to achieve the inflation target, and because of an explanation for that inertia in the economy, is public finances. We have had weak public finances for many, many years. They are weaker now, and the challenge now is particularly acute. But that's one of the reasons why there is inertia in the economy. Nowadays, you can bet with a lot of certainty that given that weakness in public finances, at some stage, you are going to have an increase in public tariffs, or you are going to have an increase in taxes, or we are going to have a major problem, a major macroeconomic problem. That is not my base case, but still there is that possibility, and that will result in inflationary pressures. And even though, as I said before, the last one of these, a major macroeconomic problem is not my base case, well, that affects inflation expectations. So inflation is affected by a combination of factors, and several of them, as you correctly point out, are related to the supply side, but there are a number of other elements present there that need to be taken into consideration.
Current monetary policy, Javier, is characterized by sticky core inflation and growth trade-off. And rates are being cut despite higher inflation. That is over the 3% target rate that you just mentioned for growth maximization. What is your understanding in this matter, Javier?
Well, yes, that's an important question. Well, let me tell you, inflation, as in many other countries, was affected significantly by the impact of COVID and by the war in Ukraine. Consumer price inflation in Mexico reached a maximum of nearly 9% in August of 2022. To give you an idea, the latest reading is 3.7%, below 4%. Naturally, with the decline in inflation that we have observed, the central bank has been able to reduce interest rates. At some point, the monetary policy rate in Mexico increased to 11.25%, which is extremely high. It's way above the neutral rate. It is very, very high, and stayed there for nearly a year. And then with the evolution of inflation, the central bank had the possibility to begin reducing interest rates. And the policy rate now is standing at 7.5%, which is still slightly above neutral. So I would say in general, the declining, if you take the overall picture since COVID, the war in Ukraine to date, well, the reason why interest rates have declined overall is basically because inflation has also declined significantly. But there is a problem which is more recently, and I think which is the one that you are focusing on. And that is the fact that core inflation, well, headline inflation has been declining because of the evolution of the non-core component. But core inflation has shown an upward trend since late 2020 and 24. It has stabilized recently, but still it is not showing a decline, and it is above the inflation target of 3%. Core inflation nowadays is 4.3%, and it has stayed there for several months, and that represents an increase, as I said before, vis-a-vis the figure that we saw at the end of last year. So in addition to this, when you take a look at inflation expectations, and this implies inflation expectations for the short term, for the medium term, for the long term, they remain above the 3% target. Now, why in this context the central bank is reducing the policy rate? Well, the most important factor is that the central bank is projecting that inflation is going to converge to the target in the third quarter of next year. And another element that they are taking into consideration is that according to their view, upside risks for inflation are lower now. The balance of risks for inflation, according to the central bank, remains to the upside. But what they argue is that those risks are lower now. And I think they are taking advantage of a number of additional elements. One of them is that the economy is very weak, and the economy will continue to be weak next year, and that is exerting downward pressures on inflation. The second element is that the Federal Reserve is reducing interest rates, and that, of course, provides margins for Mexico to reduce interest rates. And the third element is that the exchange rate in Mexico, the peso, has appreciated. That has to do with, the depreciation of the dollar, but it has also been influenced to some extent by the interest rate differential. So my impression is that they are taking advantage of this situation in addition to the elements I was mentioning before. Now, there are risks, of course, and the risks are there precisely because inflation and inflation expectations are above the target. So the thing is, an additional problem that you have to take into consideration is that in 2026, inflation is likely to receive upward pressures from several elements. We are going to have, given the situation in public finances, we are going to see some tax increases, the ones I was mentioning before. In addition to that, we are going to see an increase in the minimum wage. We do not know to what extent, but I would not be surprised if the increase in the minimum wage is again significant, perhaps not to the extent that we saw in the previous administration, but still an important increase in the minimum wage. And then there is another element, and that is the fact that next year we are going to have the renegotiation of the USMCA, the Foreign Trade Agreement, with Canada and the United States. And you know that decision-making in the United States has been quite volatile. So we cannot be certain what the result will be. I think the result is going to be that we are going to have an agreement that, it makes no sense not to have an agreement. I think at the end there will be success. But in the process, we may face a lot of uncertainty. And if we face a situation of a lot of uncertainty, we will probably see that reflected in the exchange rate. So that's another element that is going to another element of risk for inflation for next year. Now, you were talking about the central bank has the intention to reduce interest rates. Yes, what they signaled during the latest monetary policy decision at the end of September is that most of the members of the board support additional reductions of the monetary policy rate. So we will probably see 2 more reductions in the monetary policy rate in Mexico in the rest of this year. But this is risky. The situation, as I said, is not very clear. It is foggy. And I think that the central bank should be very careful with its forward guidance, not to give the impression that that is a decision taken, because if markets begin to get that impression, what you may see is an increase in inflation expectations, and then the situation gets even worse. So that's the way I would summarize the question you made.
How much would the tariff wars dent the Mexican economy, in your opinion, Javier, given that the economy is closely linked to the US, as we discussed earlier, especially after NAFTA?
Well, that is having a very important impact on the Mexican economy. Well, the US is our main trading partner. And the US is an economy which is much bigger than ours. So any movement in the case of the US has large implications for the Mexican economy. In this case, the way I can summarize the implications of the trade war in the United States in Mexico is, to a significant extent, uncertain, because the picture is not very clear. You get decisions one day and the other day again, and then a group of products, and then a different group of products, and so on.
Right.
And what are the implications of that uncertainty? Well, the first one, of course, are the implications for investment. You cannot make an investment decision, with a reasonable degree of certainty if you do not know to what extent your access to the US market is going to be affected. So that has an impact on economic growth. At the same time, you have a situation of uncertainty, and as I was saying before, at some stage, that situation of uncertainty may have an impact on the exchange rate. To the extent that this materializes, it has not been the situation so far, of course, I already mentioned it. But if that materializes, you may also have an impact on inflation. And then we have an additional element which complicates the situation even more for the case of Mexico. And that is the other element I was mentioning before, which is the fact that there is a negotiation of the trade agreement with the US and Canada. This is, I would say, a crucial institutional component of the Mexican economy. And therefore, it has a huge importance for Mexico to the extent that you face uncertainty on that, well, the situation is even worse than the overall tariff war, because this is a direct relationship between Mexico and the US, and of course, Canada also.
Right.
Despite all these problems I am mentioning, there is a positive side to this. And the thing is that so far, the tariff increases for Mexico have been lower than for most of the rest of the world. And that gives Mexico, or either gives Mexico an advantage, or keeps the advantage that Mexico has had through the trade agreement with the US. So some people think that at the end, Mexico will be in a relatively favorable situation. I would not go as far as say that this is a positive element for Mexico, compared with the situation that we had before, because we already had the trade agreement, and we did not have that overall uncertainty that we have worldwide nowadays. But still, it probably will leave Mexico in a more favorable situation of access to the US market than for most of the rest of the world. The thing is, we do not have an answer yet. The situation has not been solved. And, well, the final effect is not yet clear.
Do you think that investment activities will reactivate themselves, Javier, next year when the American trade policy becomes clearer? Because I think right now it seems things are pretty nebulous.
Yeah. No. Of course, what I would say is one major element which is affecting negatively investment will disappear, hopefully in a positive way. And I think that would be my baseline scenario once the negotiations with the United States and Canada are finalized. But that is one component. That is not the full picture for investment. You have to take into account that there are other elements. To start with, we have public investment. And I mentioned before that I see no way to be optimistic about the evolution of public investment in Mexico in coming years, given the baseline scenario that we are facing at this stage, a situation in which public finances are weak, they are facing major challenges, and a context in which most of the efforts are likely to come from the expenditure side. So public investment is quite likely to remain very low. And then you have another component. The private investment does not depend only on the trade agreement with the US and Canada. Private investment depends on a number of other elements. And there was a long discussion in Mexico about this when the predominant issue was the benefits, the potential benefits for Mexico of nearshoring. Well, I always argue that, the conditions for a successful nearshoring are the same conditions for a successful Mexican economy with or without nearshoring. And a crucial component of that is private investment. And private businessmen were very clear when they were arguing, what do we need, to increase private investment, to take advantage of nearshoring, and as I said before, to make the Mexican economy successful. And what they insisted is, we need to have certainty that we will have access to electricity, that we will have access to gas, that we will have access to water, that we will have security in the country, and that we will have a prevalent real rule of law in the country. They insisted once and again on the same thing. Now, if you tell me, is the approach the Mexican government having now to the provision of electricity, water, gas, the rest of infrastructure and so on. Is that giving me grounds for optimism? I would say no, I am very skeptical about it. If the government doesn't have the resources, because of the reasons I have mentioned several times, the natural way to solve this problem is to provide more access to private sector investment in those areas. This government has been a bit more open about that. The previous administration was very negative about it and so on. Now you see a bit more opening, but still it is not clear that they are providing a solution to these problems. So if that is not solved, the problem with private investment is unlikely to be solved. That is the issue. Then you have the problem of insecurity. I would say there is a totally different approach in Mexico nowadays to security. It is not the hugs instead of bullets of the previous administration. Now they are really going, after the bad people and so on. But still, for this administration, for any administration, that is a very big problem. It is going to be very difficult to resolve. But I would say in that case, the current administration is doing a very important, serious effort to tackle the issue. And then there is the last element, which is the rule of law. Of course, if you don't have, the rules of the game clear and you are a private investor, well, you are reluctant to invest. It is not the same when you know what the rules of the games are and what to expect. And the thing is that in that respect, there has been a deterioration. I do not know if you're aware that there was recently a judicial reform of the judicial sector in Mexico. And basically, to sum up, the main component of that is that judges are no longer determined on the basis of merit, on the basis of career, but they are determined on the basis, they are selected on the basis of popular elections, which, gives rise to serious doubts about how the law is going to be provided in Mexico in coming years. And that is an element in which I would say it is not, as in the case of infrastructure, in which I am skeptic. I need still to wait and see what participation the administration gives to private investors, or in the case of insecurity, in which I would say there is clearly a serious effort. In the case of the rule of law, there is a movement backwards. The baseline scenario is that the rule of law in Mexico is going to deteriorate. We need still to wait and see, but I am not optimistic at all about that. So, to sum up, the problem of uncertainty for private investment and for investment overall in Mexico is not going to be solved solely by a successful negotiation of the free trade agreement between Mexico and the United States. In fact, to take advantage about that potentially successful agreement, we need a number of other things to be solved in Mexico.
Very interesting, Javier. Harking back to the fiscal concerns, several governing board members have been highlighting that Mexico's fiscal deficit has sharply increased from 4.3% in 23 to 5.7% in 24, which I think was around 2.3% before COVID-19 hit. Therefore, on the fiscal side, Javier, it seems that the government has limited space to stimulate the economy if required. In that case, in my opinion, monetary policy perhaps is the only option left for policymakers as a bazooka, as it's called. How do you think Banco de Mexico is going to deal with this challenge?
Yeah, well, the Bank of Mexico has a very clear mandate. There is no question about it. The priority objective of the central bank is to achieve a low and stable rate of inflation. That's in the Constitution, the Mexican Constitution. That's very clear. There is no other mandate. I mean, there is no other priority mandate. That's the priority mandate of the central bank. And why is this the priority mandate? Well, that is not the case only of the Bank of Mexico. It is the predominant ruling by far among central banks in the world. And the reason is that with the tools that the central bank has, the best that it can do to support growth is precisely to achieve a low and stable rate of inflation. Now, this applies independently of whether public finances are sound and able to contribute to growth, or whether public finances are very weak. That is the mandate. It is not, there is no other mandate. So what the central bank should do is clear. Concentrate on that. Now, what are the options of the government? Well, the good option on the part of the government, I would say, it would be to say, well, I don't have the resources. I admit that. Mexico needs a lot of resources. So what I will do as a government is to give certainty to private investment, to lay the basis for private investment to flourish through a number of actions. I have already mentioned several. And even if the government has the constraint that it doesn't have the resources to support growth, it still has the power to implement the policies to achieve the rate of economic growth through the main channel that should determine economic growth, which is private investment. So there is no need to go to the central bank. Now, are they going to do this? It is not clear. I still have doubts. I do not know what will happen. It is a risk. I think there is a very high risk that the rate of growth of the Mexican economy will be very low during the rest of this administration. The risk is there. And there is also an even higher risk. And it has happened in other places. Well, we are seeing that now in the United States, in fact. And it is the quote-unquote easy solution, to exert pressure on the central bank to either reduce interest rates or keep them low as a means to foster economic growth. That, of course, would be a total mistake. We have seen that in the past in Mexico. The result has been disaster after disaster, major economic crisis. We don't want to see that. I hope we do not see that. So far, I don't think that has happened. But of course, when you have a situation like this, low economic growth, deteriorated public finances, there is a lot of temptation on the part of governments to go and ask or put pressure on the central bank to do that. That would be a violation of independence. I hope that is not the way the situation is.
Can you talk a bit more on the dual mandate of the Banco de Mexico in the current geopolitical climate for a trade-oriented economy like Mexico? And you did talk about this, Javier, earlier, but maybe you can give more detail.
Yeah, sure.
And do you think that spurring domestic consumption help in this regard?
Well, I would say, the discussion about the dual mandate is current. We see it appears now and then it disappears, and then we see a situation like the one we are seeing in Mexico nowadays, and then the discussion reemerges. In fact, in the case of Mexico, there was recently a comment by the president that she wanted to discuss this, that she had talked about this with a number of bankers and so on. the issue has disappeared. It has not. It is not. I have not seen it, as a major issue now. But this comment was very recent.
Right.
It was only a few months ago. Now, what is the situation? What's my view on that? I mentioned before. What a central bank needs to do is concentrate on achieving a low and stable rate of inflation. And why is that? Because that is a precondition for sound economic growth. The central bank, therefore, has to concentrate on this objective. What is the problem with a dual mandate? Let me tell you, normally, whether you have or not a dual mandate, a central bank would do exactly the same thing. A central bank would concentrate on inflation and then achieve a low rate of inflation, and that would allow the central bank to reduce interest rates because there is no interest on the part of any central bank to keep interest rates high because, of stubbornness or whatever you want to call it. For a central bank, the best thing is to have low interest rates to the extent that economic conditions allow it. Now, what is the problem with the dual mandate? The problem with the dual mandate is that it may create the perception, and there is a high probability of this, that the central bank can do more than achieve a low rate of inflation to reduce interest rates, that the central bank can directly foster economic growth. And the problem is that this is music in the ears for politicians, because politicians concentrate on the short term, and they concentrate of the political benefits they can obtain in the short term. So if you have a dual mandate, what you will begin to see is one of two possibilities. One of them is simply a mistake, a misperception. The central bank can foster economic growth, so I think they should do it. And the reason for that is simply ignorance. They do not know well. The central banks cannot do this automatically. If that were a solution for the central bank, the problem of economic growth will not exist anywhere, because simply reduce interest rates and that's it. Well, what's the problem? We wouldn't have an economic growth problem in no country in the world. But the second thing is the one I was mentioning before. One risk is ignorance, and the other risk is now we have the pretext, we have the legal power to force the central bank to reduce interest rates because that is convenient for us. And my objective is to win the next elections. My objective is focused on the short term. So it is extremely risky. I don't think that that is an avenue that we should be taking. And I would also mention that we have a recent case which is very illustrative of this, which is the case of the United States. The United States the Federal Reserve has a dual mandate. And when you saw monetary policy management in the context of the COVID, you heard the chairman of the board of the Federal Reserve saying, we are going to focus on inflation. We are aware that the economy may fall into a recession, but we know that having a low and stable rate of inflation is essential to achieve a sustainable and adequate rate of economic growth. So if these interest rates contribute to a recession, we don't care. We will do it, even though they have a dual mandate. And the other example you have from the Federal Reserve recently, a number of movements aimed at forcing the central bank to reduce interest rates. You hear the president saying, interest rates should be, 1% lower or 2% lower or whatever. Or members of the government saying it is possible to reduce interest rates by X percentage points. And the argument behind that is the Federal Reserve is not meeting its dual mandate because they are not focusing on the issue of employment. But the thing is that, the foundations behind those arguments are extremely weak and extremely dangerous. So that's the way I would put it.
Do you think, Javier, the central bank may cut interest rates further? And I'm asking this question based on another question, and that is what makes Banco de Mexico so comfortable that it would achieve its inflation target level as soon as quarter two or quarter three of 26? This is because previous experiences tell us that this is quite difficult and often complicated to achieve, in my opinion. And I think some of the governing board members, especially Jonathan Heath, is also not really convinced about the inflation trajectory as it is moving right now.
Yeah, very important issue, of course.
Hmm.
As I said before, the central bank has sent the signal that they want to reduce interest rates.
Hmm.
And the market has taken this signal as given. They are expecting, if you take a look at projections by private sector analysts,
Right.
the average, the median, is expecting that we're going to see two additional reductions in the policy rate this year, and we are going to have a policy rate of 7% by the end of the year. To be frank, I do not know if that will be possible for the reasons I mentioned before. The way core inflation has behaved, the possibility that next year we'll see an increase in inflation expectations remaining above the target, and so on. Now you're asking, why are they confident about this? The first two explanations would be the same ones I was mentioning before, because they think that the risks to inflation are lower now, even though they remain biased to the upside. That's one part of the explanation. And the other is because they are confident that they are going to reach the target. And now you ask, and why are they so confident that they are going to reach the target? Well, the way not only the Bank of Mexico, but most central banks operate in this context is they use models, they introduce a number of assumptions, and they project with the information they have available. The problem here is that we do not know what those assumptions are. For instance, I do not know to what extent they have included in their projections the tax increases that we are going to see next year. I do not know to what extent they are including an increase in the minimum wage and what kind of assumptions they are making, because on the other hand, they have to guess because they do not know either what the increase in the minimum wage is going to be, and they do not know either what the final result of the tax increases is going to be. And the other element I was mentioning before is I do not know what the assumption regarding the exchange rate is included. And there again, they do not know to what extent the negotiation of the UNSMCA is going to impact the exchange rate and therefore inflation. But the thing is that on the basis of those assumptions, their models lead them to a result in which inflation reaches the 3% target in the third quarter of next year and remains there. What is another problem beyond this issue I was mentioning before, that we do not know the assumptions? The problem is that markets do not believe that this result is going to be feasible. And how do we know that? Well, we know that because of inflation expectations. When you take a look at inflation expectations for the end of next year, they are around, I would say, 3.8%. When you take a look at inflation expectations for the long term, it all depends on the survey you consider. The central bank survey gives you a figure of 3.6% for the long term, vis-a-vis
Exactly.
the 3% target. When you take a look at the other survey, which is published by Citibank, they have a long-term inflation rate of 3.7%. That is to say, there is a credibility issue. The projections of the central bank have not convinced markets in general.
Exactly.
Therefore, the central bank is still facing a credibility problem that it needs to tackle.
Very insightful, Javier. But that's all I have for today. It's always a pleasure listening to you speaking on the most pressing issues in the field. Thank you once again for being part of the show. It was an honor.
Well, I would say thanks very much, Karen. I was very glad to have the opportunity to talk with you, and I hope that we will have the chance to do it again sometime in the future. I hope under much better circumstances than those we are facing today.
Absolutely. I
Thank
look
you very
forward to it.
much.
Thank you very much, Javier. I look forward to talking to you again in the next season.